Why the mixed picture, Poonam? What did one avoid and the other embrace?
Yeah, I think with Kohl's, the results were good, but I think the shares are trading down because they're almost more than double from where they were last year. So investors had probably built in even higher expectations than what we saw. And for TJX, the 7% comp at Marmax was just fantastic. I mean, that comp is on top of a 2-year stack of low to mid-single digits. No one had expected that. Even the highest estimate was under that. So I think the strength there is really the reason for the movement that we're seeing in the shares today.
We just take a look at the S&P Retail Index S5 RETL. You can see that today TJX is the best performer apart from Netflix, and then you've Best Buy, Home Depot, Amazon, but you've many lower as well, including Nordstrom and L Brands. Is this a consumer story, or is this a particular story attached to each retailer, the ones that are getting it right versus the ones that aren't getting it right?
I think it's a combination of both. So the consumer is in a strong position. We've heard that all across from all the retailers that have reported so far. The issue is what we've seen in the market is somewhat distorted from what we're seeing in the fundamentals. The stocks have run up across retail in the last year, and the market's looking for much better numbers to support the current share price. So what you're seeing is when retailers deliver above expectations, and that's more than just consensus, it's more what the buy side is looking for. And when they do that, we saw with Nordstrom, we saw that with TJX today, the shares do respond. But overall, first quarter, in my space at least, across department stores and apparel stores, the only retailer that didn't deliver was JCPenney. Nordstrom, Kohl's, Macy's, they all delivered better than expected 2Q results.
Poonam, talk to me a little bit about TJX again. I was looking at a stat on it, and it hasn't posted a drop in same-store sales basically going back to 2009. I want to know specifically what its brands are doing so well to continue that growth streak.
Yeah, it's not just TJX, Burlington, Ross stores. What's really appealing about these brands is the treasure hunt concept that they have. So consumers love going to their stores. They love finding that deal. They love finding something exciting, something new that they didn't expect in the stores. That's really what's been fueling the growth here across all of off-price, including TJX. And we think that'll continue to be a trend for the near future and even the long term.
I mean, Poonam, trade is bound to affect these retailers too, right? Where they source their materials. I mean, they're discounters too.
They are discounters, but it's a little different because they buy excess inventory. So there will always be excess inventory, especially today when online is growing and the returns there have trouble finding a new home.
That's the other thing. Did online come up in any of the calls, and what are their strategies for online?
Yeah, online continues to be a strength across most of retail. It's growing double digits. The penetration is rising at department stores. It's about 20%, if not more. Nordstrom's moving towards 40%. So online continues to be a strength for these retailers. They are investing in online, and we expect them to continue to do so to drive that growth.